The directors for the year ended 31st March 2024 have been with you for some time now. With your permission, we will take them as read. From a brief overall review of the company's results for the year, gross income on a standalone basis for the financial year ended 31st March 2024 was rupees 195 lakhs and profit before tax was rupees 52.71 lakhs. Profit after tax of the company for the year on a standalone basis was rupees 72.26 lakhs. And as on 31st March 2024, the other comprehensive income net of tax for the year amounted to 14.04 crores. On a consolidated basis, gross income of the company for the financial year 31st March 2024 was 221.68 lakhs, and the consolidated profit after tax stood at 67.47 lakhs. The consolidated other comprehensive income was rupees 15 crores, and including profit, the same amounted to rupees 15.67 crores for the year after tax. Given India's strengths, the performance of the company's non-current investments was satisfactory. The profit realized on sale of some non-current investments was transferred to retained earnings in conformity with the accounting standards. The company had been developing its property in Calcutta, where the work took much longer than expected, given the multiple sanctions involved, including from the Archaeological Survey of India and the lockdown imposed by COVID. While the building was ready last year, it gives me pleasure to inform you that the completion certificate from the Calcutta Municipal Corporation was finally received on 30th May 2024, and your company is now taking steps to utilize this asset judiciously. The company has, as members are also aware, despite supporting Alfred Herbert Limited, including providing significant financial support, AHL did not perform satisfactorily, necessitating in the closure of its manufacturing operations in 2021. Almost all assets have since been liquidated and all legal pending liabilities settled fully. Our focus and effort in the foreseeable future, therefore, is to unlock value from your company's assets and redeploy them in your company's core area of operations, be it real estate or investments. Given the strong potential and promise in India currently, I have every hope that these will maximize the value for all shareholders in the years ahead. I wish to sincerely thank and appreciate the valuable services rendered by employees at all levels, and I'm confident that the company will continue to grow and prosper in the years ahead. On behalf of the board, I would like to take this opportunity to thank the company shareholders and customers for the valuable support extended. Right, that we had a sanction area of about 55,479 square feet. But of that, perhaps it's only prudent on my part to point out that of that 55,000, just under 10,000 is car parking area, because in Calcutta, the car park was always a part of the sanction in the building plan. And therefore, really the office area would be 55,479 minus the 9,766. I think the company, as I said in my remarks earlier, the company is looking at how to utilize this asset judiciously. It probably may be a combination of certain area being sold and a certain area being rented out. Current rentals in the area are in the ballpark of about 100 rupees per square foot per month, and that ballpark number is really what it is. We're looking at what could possibly be the best outcome in terms of maximizing value for all shareholders, and your board is seized with that responsibility. The second issue you raised was with regard to hydro. It is absolutely true that till 2018 we earned approximately 78 lakh rupees as rental income in hydro, and once this was vacated in October 2018, we had a problem in finding alternative tenants because of two problems. One, we could only offer this on the basis of warehousing charges, and a lot of multinationals and the larger companies do not want to take any warehouse on the basis of warehousing charges. They want possession, they want it as a let. And we did not have the power to sublet from the Calcutta Port Trust, which is why we could only offer it as storage charges or warehousing charges, which we used to charge them. Second, the whole warehousing industry in Calcutta seems to be moving towards the Bombay Expressway, and therefore this area is no longer as much in demand as it used to be traditionally. And three, with the lack of the right to sublet and with the KPT raising retrospective demands with regard to refixing rents for the past, where we already have a demand of 50 lakhs on something which we had paid the entire rentals, it fundamentally became something which became challenging, and we surrendered the warehouse back to KPT on the 3rd of June 2024. So we don't have the high road warehouse anymore in Herbert's possession. He's still trying to come to terms and trying to see what's fair for the demand raised by KPT with regard to past rentals of just under 50 lakhs, which is duly disclosed in the accounts which was received by you kind of scenario. So rentals had come down partly because of the lack of ability to monetize the hydro warehouse. I am hopeful and confident that in the years ahead, with the asset now in Strand Road, rentals should again look better and we should be able to increase it significantly in the foreseeable future. The second question was with regard to the implications of tax and how there's a tax on inflation now going forward. Let me just remind you that the original rate of taxation used to be 20% after indexation. That rate has now been brought down to 12.5% because they've taken indexation away. And you still have the right to use the 2001 valuation as the cost. So they haven't taken that benefit away. So therefore, effectively, you would pay a 12.5% tax on the increased post 2001, which is a much lower rate for many people as compared to 20% with indexation, depending on, of course, the length of holding, etc., etc. So it's something which I think we consider to be relatively fair at 12.5% rate. And rest assured, we're looking at all options in terms of what we should do with the property in Bangalore and other places, because whilst a joint venture is an easy option in practical terms, to implement it and to enforce it should something not work out is extremely difficult in the Indian environment. So we're looking at all options, we're looking at all qualities of potential partners, and we will then evaluate what is in the best interest of the company. The third issue that was raised by Mrs. Pradhan was with regard to the credit rating. I'm not sure we technically have a credit rating. Partho, correct me if I'm wrong, because we have no debt whatsoever and we have no listed instruments. But I can only assure you that credit rating would be fairly solid because given the fact that we have significant assets with no leverage, no public deposits, nothing, I think we probably have, I would like to believe, reasonably decent credit rating. In terms of the capex plan, we've just completed the biggest capex in terms of building this building in Strand Road, which we spent over 36 odd crores in putting it together. In the immediate future, there is no immediate capex required unless we decide to develop some other property that the company owns. And at this point, there's nothing which has been approved or passed by the board. In terms of the VC continuing in future AGMs, that will depend on the policy of the Government of India. We have been permitted to use VC as a method of communication and meeting, courtesy the Ministry of Corporate Affairs and SEBI. And as long as this continues, we are very, very happy and committed to holding this meeting on the VC mode to allow maximum shareholders to attend, irrespective of the location of their residence. In terms of reward for shareholders, I think personally the biggest reward for any shareholder would be the growth in the share price. And I would like to believe that it has performed reasonably satisfactorily in the recent past. And I have every hope that this will continue to reward shareholders in the years ahead. Taking Mr. Banerjee's question, stock split, we are a very small company. We have a share capital of only 77 lakh rupees paid up. And we already have something like 2,500, 3,000 shareholders. Am I right, Shobna?
Yes,
how many shareholders do we have? So we already have a very high number of shareholders considering the very small share capital we have. A stock split will only incur much higher expenses for the company because if the 2,500, 3,000 shareholders becomes 5,000, 6,000 shareholders, it becomes very, very expensive to service. And as I repeat, we have a very small capital. So frankly, a stock split may not be in your company's interests given the small shareholding or share capital. I think in terms of plant visit, as I mentioned to you earlier, the plant in Bangalore was closed in 2021. And therefore, there's no operational plant today which you may want to visit. And therefore, I think there's really nothing. If we have a plant in the future, we'll be more than happy to facilitate visits by shareholders should we get into any other operating line of business down the road. In terms of low profitability, it's something I need to explain to you. Whilst, as I explained to you, the other comprehensive income, including profit for the year, was 15.67 crores. It looks much smaller in the P&L because as per the accounting standards, all the gains in the portfolio that the company has invested in is taken below the line straight into retained earnings. So what's really happening is whilst you're looking at a profit before tax of let's say 70 lakhs or 67 lakhs on a consolidated basis, all the earnings made by the company on its portfolio when you mark to market it based on the accounting standards is going straight to retained earnings. and would never really hit the P&L. So when you look at the performance of the company, you perhaps need to look at the profit before tax and the other comprehensive income in conjunction to give you a true depiction of what really was the company's performance in the year. If one looks at that, for the current year, it was 15.67 crores, which potentially was the highest ever that Herbert has done. So that's something I just wanted to clarify, that you need to look at it in conjunction, and there's not much we can do as a company because we have to comply with the accounting standards, which is mandated by law and reinforced in the Companies Act. In terms of the legal expenses, the reason the legal expenses have stepped up is because of certain litigation which continues with regard to certain management staff in Bangalore who have been claiming benefits which were not due to them legally. It continues because of certain litigation with regard to GST and GST and VAT claims, which we are in the process of resolving. We've made significant progress in resolving most of them. 3 or 4 cases continue, and which will continue to incur a certain amount of legal costs to protect the company's interests and make sure that we are not bullied into paying things that are not due or pay away. We have every intention to comply with every law, but nothing beyond that. In terms of the properties, I think I've dealt with it in my opening remarks. And with regard to your comments in car and travel, I think they're very small expenses given the size and operation of the company. I think the total car bills would be in single-digit lakhs, and travel is also in single-digit lakhs. So I don't think the material expenses, and frankly, we will have to spend more as we recruit more talent to help us navigate the years ahead with the whole concept of unlocking property and then investing it back into real estate investments, which way will require a larger team, where we'll have to incur certain more costs, which for me are investments into the future, rather than looking at it in isolation as cost. I think that takes me through all the questions that were raised, and I hope I've answered them satisfactorily.